The State of Real Estate with your host, Gerry Lantaigne.
Hi, and welcome to The State of Real Estate. I'm your host, Gerry Lantaigne. This week's topic will be about financing, and we'll speak to a mortgage broker about all the ins and outs of financing. We'll go to that shortly, but first, let's do the market report. Today we'll be comparing stats May 2019 to this year's current May 2020 results. And these stats are brought to you by the Lakeland Association of Realtors. First of all, new listings. New listings are down by 4% from May 2019 to this May. And inventory of homes for sale in Muskoka is down by almost 30% from the same time last year. That just means there's not as much stuff up for sale. However, home sales are up by a whopping 68% from May 2019 to May of this year. And really good and interesting stat is that home sales have almost doubled from April to May of this year. And that's a really encouraging sign for the real estate market. In March, the COVID-19 literally stalled the market. And in May, it started to pick up a bit. But incredible, home sales have almost doubled from April to May of this year. And that's a really encouraging sign. Due to the low inventory of sales and the high volume of buyers and the increased number of buyers, we are currently looking at a seller's market. And it promises to be a very busy summer in Muskoka for real estate and sales. We'll be back in a short while with our interview, but I encourage those listeners, for those of you who are listening to the radio program, to tune into the Facebook page, Hunters Bay Radio's Facebook page, and check out the location that we shot our interview from earlier today. It's an incredible and spectacular view of Muskoka over Fairy Lake. It's just stunning. So we'll be right back with that interview. Thank you.
The State of Real Estate with your host, Gerry Lantaigne.
Today's episode is on financing, and we have the pleasure of speaking with Cindi McLean from Mortgage Men Dominion Lending Centers. Cindi, welcome to the show, and thank you.
Thank you.
Excellent. Well, let's start off with what are the steps that a buyer needs to do to get a mortgage?
So typically I like to see a buyer 6 months to a year before, and you're going to think that's a little bit crazy.
Yeah, that's a lot of lead time.
That's a lot of lead time, but I've got a lot of work to do, and we need to get your ducks in a row, and we need to make sure that your ducks are the right ducks we need. Mm-hmm. So typically we're going to look at credit bureau. We're going to polish anything up, and we'll get into that a little later with some tips on that. We're going to look at your job. Is your job changing? Has it changed in the last year or two? And we're going to make sure that you can afford the properties that you're looking for, so that when you're out with the real estate, that you're not overlooking and yeah.
So you're not wasting your time by going out in advance
and then when you look at this house and you have to buy down here, then that's a very hard sale for you.
Yeah. Exactly. So what is a pre-approval, and what does it really mean?
So that's a burr for me. I'm going to say a pre-approval isn't worth the paper it's written on. I have a pre-approval on my office wall for $1 million for my cat. So a pre-approval, I'm going to plunk in some information.
As your cat is going to be getting the mortgage?
Yeah,
okay.
Exactly. So I plunk in the information, it goes through a computer, it comes back, I hand you a piece of paper that says, Gerry, you can buy a house for this much, subject to your income, subject to your credit bureau, subject to the house, subject, all the way down. To do a real pre-approval, I want to sit down with you for an hour. We're going to dissect that credit report. We're going to look for any errors, for starters, many errors on them. It might not even be your credit that's on there. We're going to adjust things. We're going to make sure that that credit bureau looks as sharp as possible going in. We're going to look at your down payment, where it's coming from, how long's it been there, do we need a gift letter, what are we going to do for that to back that up?
What's a gift letter?
A gift letter would be, so anytime you're making a deposit, we have to put it through anti-money laundering. So we have to look back at that money and see where did it come from. Yeah. So if it's coming from an immediate family member, Grandpa's got to sign a letter saying he is giving you that money and you are not paying him back, because that's not part of.
Because that would go against your credit.
Absolutely. Okay. So we need to look at all of those things in details, and then we, a verbal pre-approval is good. that piece of paper is still not good, even if I look at all these things. If you go buy a house that has structural issues, the house isn't complete, they look at the house too. So
Yes.
you're never 100% guaranteed unless you're walking in with cash.
Okay.
Never.
Right. If you don't need a mortgage, then there's no question.
Exactly. Yeah. So very valuable to have a full pre-approval. Should take about an hour of someone's time, and you want to find somebody that's willing to spend that time, not just shoot you at a number and send you out the door.
And again, that's no guarantee that you will actually get the mortgage. It's just you're sort of pre-approved to spend this much. Is that right?
So we can, yeah, unless something changes between now and then, right? So we look at that and we're like, yeah, we're guaranteed for that, but it depends on the house you buy too.
Yeah.
So we've got to let that final piece.
Okay.
We can't see until you buy the house.
Now, when it comes to financing and lending, what's the difference between using a bank and using mortgage agents like yourself or agencies?
Okay, so this is one of my favorite topics, so look at it. So, banker's working for a bank, and I'm working for you. And the best thing about it, Gerry, is it's kind of crazy, but the bank pays me, you don't pay me. So you get an expert working on your behalf in over 200 banks, and you don't pay.
Okay. And you're trying to get me a better deal than the bank probably would.
I am trying to get you a better. I'm getting you the best deal I can find you on the street. A mortgage broker or an agent is paid by volume. So I just want you to buy $1 million house. I'll always give you the best rate. So we always give the best rate because we're paid on volume.
Excellent. What are the different kinds of institutions that can legally lend money for mortgages?
Oh, there's many.
There's the big five banks.
The big five banks, which we do use most of the big five banks, and then there's what we call institutional lenders. So there are lenders, mono lenders we call them, and mono lender is someone that doesn't take deposits; they only give out money.
Okay.
And then we've got our B lenders and our private lenders, and we can go all the way down. So we have options for almost everybody.
Okay.
Whereas a bank has a very square peg.
And they can only use their institution.
They can only use their institution. So they may have a mortgage, they may have a mortgage line of credit and a line of credit, whereas I've got 200 different banks with different products and they all have different niches. So it's very much better.
Can interest rates for financing and mortgages, can they be negotiated, or is that just a straight up set formula?
So that's a good question. If you're working with an agent, they're going to find you the best rate for your circumstances. You know, if you've got higher credit, you might get a better rate, so on and so forth. But negotiating, yeah, absolutely. When you get that piece of paper in the mail on a renewal, you should definitely not sign that piece of paper. Call your bank and negotiate. Call a mortgage agent and have them negotiate for you.
Okay.
Because that rate coming out on that piece of paper is absolutely not the best rate you're going to get.
All right. So they're just
Most of the
throwing
time.
their favorite number at you.
Well, yeah.
Okay.
It comes down quite a bit. So I've seen some people sign those back where we could have saved a lot of money at that time. Always on a renewal is a really good point to touch base with your mortgage agent, who will, let's look at the next 5 years. What does it look like? We're not just going to renew that mortgage. We're going to say, we want some renovations. Maybe it's time to put a line of credit behind that. Maybe it's time to get a little more money out. Maybe we need to wrap in debt. Mortgage renewals are a good time to sit down, focus, and have a plan going forward.
So, for just an example, then, if I've had a mortgage at one of the big five banks for my 5 years, that term is up. They send in renewal. If I switch now and go to agent like yourself,
Yeah.
will I be penalized?
Well, I can put it back at the same bank for
Okay.
starters. If
And
it's
get a
bank
better
that
deal?
we use. Sometimes I can get a better deal. We do a lot of volume with the banks. Significant. I think it's it's over 40% that
Right.
is initiated. Mortgages are initiated by mortgage brokers compared to banks now. So we're doing a lot of business that way. So we do get preferred rates sometimes. Definitely. Yeah.
Okay. And then there are some institutions in the financial markets and mortgaging. The Canadian Mortgage Housing Corporation, which is a Canadian government.
Yeah, so they're default
And then
insurance. Yeah.
default insurance. And then there's Genworth and
Canada Guarantee. Yeah.
What does it mean? What do they do? What is default insurance?
Okay, so default insurance is for the bank, basically. It's
Okay.
protecting the bank. So the bank is saying, we're not going to give anyone a mortgage that doesn't put 20% down. So
Which is a lot.
that's a lot of money, and that's a very hard thing for a first-time home buyer. So what we do is they've set up CMHC, Genworth, and Canada Guarantee, who basically default insure that mortgage. Okay, so if the mortgage goes sideways, the bank will get their money back. So they
So
have
if
no
the
risk.
customer all of a sudden say
Default.
loses the
Yeah.
job, they can no longer pay the mortgage.
Yeah.
But that doesn't protect the customer.
It does not protect the customer.
It protects the bank.
It protects the bank. For that, on a 5% down, first-time homebuyer mortgage, 5% down, CMHC is going to charge you 4%. So you can see where we only have 1% into our house when we get in that door. That 4% will be put onto the mortgage, stretched out over the amortization, or you can pay it in cash up front. But if you can pay it in cash up front, you probably would have put more down.
Right.
So, yeah. So it's...
So that makes things a lot more expensive in the end to buy that same property.
Yeah.
Okay.
Well, your down payment, the down payment is almost eliminated because you've come back to 4%.
Right.
It's a little bit harder. Necessary.
When is an appraisal needed, a home appraisal? When is that needed in terms of a mortgage or financing?
So with COVID, we're trying to get around doing we're doing a lot of desktop, a lot of drive-by appraisals because we can't get access into the house. It's more difficult for the appraisers. So an appraisal is going to be called for if the deal is risky, like if there's no real good stuff in that deal, it's a little bit sketchy. They're going to want to make sure that property is really good if the client is wavery, right? So they're going to look at that property. They're going to look at the property if the listing says handyman special. We're going to look at the property if it's a private sale, because no qualified real estate agents listed that and gone through,
Okay.
It could be way out of whack.
Yep.
We're protecting the clients at that point as well as protecting themselves, because we don't want you to buy a house that's way out of whack,
Yeah.
for sure. So quite often appraisals are called for. However, I am seeing less and less of them because we are doing desktops more.
Okay.
And if there's enough information on that home, if the home's a new build or something, they have no information on it, you're going to need an appraisal.
Okay. Now, regarding appraisals, sometimes in a heated market, there's competitive bidding going in on one house. So if the house was worth $400,000,
Yes.
and some clients wanted it, and they wanted it bad, so they paid $25,000 extra on top to guarantee they get the house. What happens when that appraisal comes in and says it is not worth $425,000?
Yep, it's going to come in at $400,000, and when it comes in at $400,000, the $25,000 extra is so we base our mortgage on the sale price or the appraised value, whichever is less. So sale price is $425, appraisal is $400. It's going on $400. You better have $25,000 extra.
And do you mean like $25,000 in cash?
Yes, I do.
Because you can't just turn around and borrow that, right?
If it works into your ratios, we could do it on an unsecured line of credit, something like that, borrow it against another house, something like that, but it's all got to work into your ratios. So.
All right, well, in the same scenario, what if I'm defiantly adamant that this house is worth $425,000, yet that appraiser said it was worth $400,000? Is there something I can do to complain about the appraisal?
Yeah, you can complain. So usually you bring it to me, and we're going to look. You're going to say, "Oh no, that's off." I'm going to look at who did the appraisal. Was the appraiser local? We have amazing local appraisers that are bang on. So I'm going to look at, that's my first thing. Now I'm going to look at the comparables. Do they make sense? If the comparables are whacked out and don't make sense, we can change lenders. We can order another appraiser, or I can go back to that same lender and say, look at those comparables. I don't think they're good, and let's pull another appraisal.
Okay.
So we can, seldom done, because they're bang on. They have many comparables, and you can see, like, this one's this is this, so it lines up very well.
All right. Would this be a good time to talk about, as we were talking earlier, about the bettering your credit score, or dealing with your credit?
Yeah, so the big secret, so here's the big secret. You need to listen to this one. So CMHC, your default insurer on July 1st, is squishing everything down. You can buy a little bit less with your income, but you got to have better credit, much better credit. Genworth and Canada Guarantee have not followed as of yet.
Ooh,
we're hoping,
okay.
First time ever that they haven't actually all done the same thing.
Okay.
Yeah, so we're really happy with the other side there. But okay, so here's your credit bureau. Here's where people go wrong, and I sit with people every week. Elderly people, never missed a payment in their life, tell me they're going to have a perfect credit bureau. I pop it up and I shatter their world by telling them they can't even buy a house. Here's the story. If you have revolving credit, Visa, line of credit. Anything you can reuse, not a car loan because it just goes down and goes away.
Okay.
Not a mortgage, it goes down and goes away, right? So your visas, your lines of credit. If you're using over 50% of the limit, you are going down every 45 days. That is horrible. You could have been there for 2 years. And I'm talking a card for $500 or $1,000 will negatively affect you
If you're above your limit?
if you're above 50% of your limit.
Oh, well, okay.
Yeah,
50% of
your
the limit.
Yeah, so that's the big thing. And so what we need to do, 2 ways to fix that. We call the number on our card, and if it's $1,000 card and you actually use $1,000 a month, so you've been, you think that's reasonable. I don't want a bigger card. It could get lost, whatever. You're going to call and raise that to 2,000. Pretend it's 1,000 in your head, and you'll never go over 50%. The other way, just cut that and use half of that card. Never go over half your card. So I spend a lot of time with people, and that's why I want to see you a year ahead too, and not even a year, like 6 months. If you give me 3 months to get those visas down to 50%, and we bounce back every 45 days, we're now ready to buy a house.
Right.
Whereas if we rushed in, assuming we had good credit, because you thought you did.
You would think
and
so.
You would
I pay every month.
And this is new. Yeah. You've never missed a payment, Yeah. So we want to see you early, because that kind of thing can get you.
So instead of saying, I want to buy a house, let's look at this one of the first things then you should do is, I want to buy a house, let's talk to a mortgage agent first.
Absolutely.
Before we even start looking.
Absolutely.
Okay.
Yeah. You want to find your realtor and your mortgage agent early. Way early on the mortgage agent. Yeah.
Okay. Is there such a thing as mortgage insurance to protect the, and what does it do to protect the consumer from unseen circumstances?
Absolutely. So it's the law. We have to provide insurance on every mortgage we do. We give you the option. It's totally optional. We have life, critical illness, as well as disability. It's a very serious conversation I have with a client. I've seen a lot in my banking days, and that is the biggest part of the mortgage right there, is me making sure that, especially when you're young, that you're qualified, your rate will stay at that point through your mortgage, and your family's going to be protected should something happen to you. In today's day and age, it takes two incomes to buy a house usually, right? It's very hard to buy with one. 2 incomes, if you lose one of those incomes, you can't afford your house.
Right.
If we can get rid of that mortgage for you, and it was a reasonable, it's gold.
Yeah.
It's very important.
What kind of expenses are involved with mortgage insurance?
Depending on your age. So that's why I'm looking at my first-time home buyers. Crazy if you don't take it at this point.
Okay.
Basically, you're healthy. It's very inexpensive, and
You
it
mean that
follows you.
sticks with you for the rest of the
Absolutely.
mortgage?
Absolutely
Okay.
does. Yeah, you can cancel it at any time.
Yeah.
So if your mortgage is almost paid down, you can cancel that. But that's ensuring that if something happens to you, your mortgage will go away and your family will be fine.
And that cost of the insurance, is it then a fee, or is it amortized into the mortgage itself?
No, it's a separate. No, it is a separate. Absolutely separate. So it is a monthly fee that will be deducted from your account.
Is there an average ballpark, or does it depend on the value of the house being bought?
Absolutely. It depends on the amount of the mortgage payment, not
Right.
on the house,
Oh,
on the
okay.
size of. So it's so
Okay.
much per thousand,
All right.
right? And it depends on age and health.
Okay. Now the big question, we're living in it. How has COVID-19 affected the mortgage and financing industry?
I can't speak from the bank side. I can speak from the broker side. So I think we did a wonderful job. I'd say probably 80% of us work from home. I personally have an office, so I scurried home. A little bit hard for me to work without my assistant, my very dedicated assistant. So a little bit hard for me there. But talking to my underwriters, we didn't skip a beat. We really didn't skip a beat. We're used to working with people that work from home. We have dedicated underwriters that work from home as well. So it really wasn't, other than a little bit of disorganization, husband walking through the room kind of thing, a lot of Zoom meetings, but
Yeah.
it was good.
Can you please, now that you touched on it, can you please explain to our audience what an underwriter is and what an underwriting does for a mortgage?
Yeah, so when you meet with me, I wrap everything up. I get a credit bureau, I get your income, I put it all together, I tell a pretty story of why you should have a mortgage, and I ship that off to my underwriter. My underwriter works for a financial institution, and her job is to go through those documents. She's looking for fraud, she's looking for anything she can find, and she's making a decision, do we want to mortgage this house? At which point she'll say yes, because I only give good ones, and, and she'll ship me back a commitment. And then once we go forward and we sign that commitment back to the bank. So the underwriter is the one that gets in there and looks at all the different, sets the rate, and goes from there.
So earlier when we were talking about how COVID-19 affects the market, you mentioned something about
CMAC?
yes, the CMAC,
Yeah.
and basically with Canada Mortgage Housing Corporation. How is COVID-19 going to negatively affect people's ability to purchase?
Right. So CMHC is a little bit nervous, so they are tightening down how much. So you're going to have a little bit less buying power come July 1st, and you're going to need a higher credit score. So they're kind of squishing in the parameters of who's going to get a mortgage.
Now, are the banks and the other institutions going to follow suit with the same kind of thing? Are we going to expect it to be a little harder to get mortgages in the very near future?
On the income side. So
Yeah.
definitely on the income side, we've got to be actively at work. So if you're not at work, we're not giving a mortgage at this point, right?
Yeah.
We're not using your income. Your husband may be able to work, or your partner may be able to hold that whole mortgage. But if we need your income, that is a problem.
Right.
So, yeah,
Okay. And I got another.
it's a little bit.
Quick question. Why is being self-employed such a bad thing when it comes to getting a mortgage? I mean, I've been working for 30 years at the same job. I've proved I can work every day and get my money together and pay my bills. So
Another pet peeve. So
Yeah.
again, when I'm sitting down with you, and we've had our conversation, and you're pre-approved, you're walking out the door, and I'm like, do not change your job, do not buy a truck, do not,
Yes.
and I actually have a sheet of paper to tell you what not to do before we meet again. So when you change, they want to see 2 years. They want to see 2 years
of self-employment?
of self-employment, and we're going to look at your net.
Yeah.
Not your gross. We're going
Right.
to look at the net, and some of our lenders will let you build back in certain things, car allowance, home office, that type of thing. But we want to see 2. So the ones are, if you're contract, we want to see 2 years. If you're self-employed, we want to see 2 years. And if you're part-time, we're going to average those 2 years. Full-time, no problem.
Okay.
Get me a letter saying you're not on probation, and a pay stub with a year to date, we're good to go.
Perfect.
Maybe
So,
a T4 from last year.
so it is easier to get a mortgage if you actually are an employee of a company. Is that correct? Well, I'm not going to say easier, but
It's timing. You can get self-employed people get mortgages every day, and they get beautiful mortgages, but they can show me 2 years worth of self-employment, and I'm going to average those 2 years.
okay.
Yeah.
All right, that kind of wraps up everything I kind of wanted to touch on. Cindi, thank you very much.
You're
And
very welcome.
if you could please let the audience know how to get a hold of you.
So you can reach me. You can email me, find me on the web, or you can call me at 705-783-8383, or stop by 50 Howland Drive, knock on the door. We're still not letting clients in the door because we're just waiting for our plexiglass to come in. So we're having parking lot meetings right now.
Excellent. And that is Cindi McLean from Mortgage Man Dominion Lending Centers. Cindi, thank you very, very much.
Thank you, Gerry.
The State of Real Estate with your host, Gerry Lantaigne.